Welcome one, welcome all to the show. This is the Node Network. I am Mike, aka Veteran Crypto, and with me as always, Monday through Friday, 9 a.m. Pacific time to 11 a.m. is David from DeFi University and also the Node. How's it going, brother?
I'm doing well, Mike. Doing really well. I got my new camera set up here, man. So it's a little bit different, to have like a real digital camera that's pointing back at you. It's
Yeah,
kind of cool, man. Yeah, yeah.
no, I need to update, upgrade mine. I just got like a little travel one, but I mean it works, but yeah, it makes a huge difference having a nice camera.
Yeah, dude, having audio that sounds good, having the camera set up properly, having the lighting a little bit better makes a
Mhm.
big deal, man.
Yeah. That's the one bad thing about having these huge windows here, like behind the monitors is I get glares like from the morning sun and things like that. So it's hard to get the right lighting. But
I
it's a
hear you.
beautiful view. It's a beautiful view though. So yeah, no, it's I'm kind of excited. I let the Morrow in the Fall show know to send you a direct invite to that show because they sent me one, but I don't think you can join it because it's attached to my email. So I asked them to send you one directly.
Okay, got it. So I should be expecting that to maybe David at the node.pro.
Yes.
Okay. Looks like I may have just received it. It's a StreamYard invite, right?
Yep, that's it.
Okay. Yep,
So
I got it.
so I would say like probably like 40 minutes before the end of the show, just so you can get there a little bit early and get settled and stuff like that. And I'll just take over at the end of the show and talk schmack about something. Maybe talk schmack about XRP or something.
It sounds good to me, man. It's easy to do that.
It is. It's punching down a little bit, but anyway, yeah, I think that you'd be a great a great addition, to representing the channel on that show. Mix it up a little bit. We can bounce back and forth. But well, that being said, let's jump over now and introduce everybody to our YouTube channel. If you want to join the chat with Nasty and the rest of the crew, then come on over here to YouTube and look us up at the Node Network, all one word. And you can find us live. You can find all of our shorts. You can find all of our past episodes for the Node. Our separate show, Crypto and Chill, Tuesdays and Fridays at 5 p.m. Pacific. Blockchain Report Monday, Wednesday, and Thursday at 11:30 a.m. Pacific. We got Sovereign Soil. Actually, I need to add the one that I just did this past weekend. Saturdays at 6 p.m. Pacific. David does his market wrap up Monday through Friday at 1 p.m. Pacific. And on Tuesdays and Thursdays has started doing his live coaching. So we have a paid service that he does where he can basically coach you one on one and accelerate your learning, from wherever you're at, currently. If you know nothing about crypto, if you know nothing about wallets, if you know nothing, he can take you from that to a competent DeFi investor in a matter of a couple of weeks with intensive one-on-one coaching. And so he's putting his money where his mouth is. Took a member of our community, Ellie, and is basically doing that for her. And he's putting it live so that you can show that the system works. So excited about that. He had his first show last week, and then tomorrow will be the second episode. Um, Jeff on the weekends does Saturday Night Fever at 6 p.m. Pacific, where he started to do interviews with fellow DJs. If you're into that type of music, it's a great time. It's a great way. I usually listen to it kind of in the background while I'm working on Saturday nights. This running a show like this is it's a lot of hours. It's a lot of hours on social media and promoting and things like that, doing the marketing. So we got the Red Pill on Thursday evenings at 6 p.m., where pretty much a bunch of us and a bunch of friends that we have across the ecosystem, we usually just pour ourselves a drink. Some people smoke it if they got it, and we just debate, those hot button issues, religion, politics, whatever it is that the hot topic is at the moment. And then Jay and Ellie have their gaming show Wednesdays and Sundays at 6 p.m. Pacific. So that's why we're the Node Network. Is we are a network of channels. We have a bunch of different stuff here. If you like gaming, if you like music, here in the next coming weeks, we're going to be launching an AI music channel that in between all of our shows, it will be streaming live music. So a little something for everybody here. But if you want to find us on X, then our handle is at the Node Channel. I'm going to have to see if I can change that. I want to see if I can get it to the Node Network. But you can find us at the Node Channel. And if you would like to check out our homepage, it is thenode.pro. And this is where you can find everything that we offer. Our live show, the chat, links to the news that we talk about during the show, David's DeFi University. It's a no charge. You can take yourself through the course, and it takes you from, again, knowing nothing about crypto. Maybe you don't even know about traditional banking system and how all that works. Educates you on all of it. Very structured, very professional. Has quizzes to where, for checks on learning, and you can take yourself through that. Cost you absolutely nothing. There's no tricks. There's no gimmicks. The private coaching, this is what he's showing live with Ellie on Tuesdays and Thursdays. That is a paid service. And then the AI newsletter is about to launch. It is $20 a month. But the cool thing about it is you pick what assets you want in your newsletter. Crypto, stocks, commodities, S&P 500, all of it gets pulled. You put in the tickers, you generate it, it gets delivered to your email, and you can view it on your browser. But it gives you trading ranges, it gives you social media posts about the assets you choose, it gives you liquidity pool ranges for the assets you choose, and it gives you the hot news for those assets that you chose. So it's a fully customizable newsletter for you, for the assets you're interested in and what you're invested in. So super excited about that. And then, of course, we have our store where we're, here soon we're going to have, mugs, hoodies, shirts, all that sort of stuff. To where if you want to support the channel, you want to, buy some cool swag. It's a great a great way to do that. Because again, we have a bunch of stuff that we offer that costs nothing. So we like to the stuff that we do charge for, we like to make sure that it's something that you can just opt in. If you want to tip, if you want to do, whatever. So, we don't like gating things off and making everything paid. Just we genuinely just want to help people here. But again, if you want to take things to the next level, you want to help support the channel, we appreciate it. So with
Value
that,
for value.
value for value, exactly. So, are you ready for the news, David?
I'm ready to rock and roll, Mike. Let's do it.
Awesome. All right. So right out the gate, we're going to go with macro and TradFi. So it looks like there was a 24-hour ultimatum presented by Trump. It looks like the global economy is currently bracing for a potential energy crisis as President Trump's Tuesday deadline for Iran to reopen the Strait of Hormuz looms. So energy shock. Brent Crude has surged above $111, with Goldman Sachs labeling this the worst oil crisis in history. What are you seeing on the price of Brent Crude?
Yeah, so if I take a look here at WTI, if we start by taking a look at WTI futures, the first thing that I see, if I can go ahead and share my screen here, why don't we just, hop in just real quick and take a look at this just briefly. So the first thing that I see here, Mike, if we're taking a look at WTI, is this is a lower high. So I'm zoomed in here to a 4 hour. Here's that $120 high from a couple of Sundays ago. And this is the high that we put in just yesterday. So, after the futures open on Sundays, usually you get some type of a gap up or a gap down, especially now that crude oil is the market to watch globally. But, this is so far just a lower high. Now, if we end up getting some type of, maybe the Iranians capitulate, right? Whoever's left, I'm sure they're sick of, getting blown up. So whoever's left there, if they're still breathing, eventually they're going to say, hey, you know what, uncle, they're going to call uncle eventually, right? And
Mhm.
if not, well, then they're all going to die, and then the strait will be open. So they either capitulate and surrender, or uh, they're going to be gone. So when I look at the chart of crude oil and I see it putting in a lower high, I just think to myself, well, it's probably just a matter of time until we see this market roll back over. But let's take a look at Brent, because the WTI contract that I was just sharing is a different contract than the more international Brent contract is. So if we just take a look at futures here, I'm looking for Brent Crude futures. This will work. So remember, WTI is trading for $112. It looks like Brent is actually trading at a discount. There's no way. I've got to be looking at the wrong contract, because usually, this contract trades at a bit of a premium, and it seems as though it's not. So that's kind of interesting to me to see Brent not trade at a premium to WTI. And so all that tells me, Mike, is that maybe we're about to see the end. I think that there would be some type of, you know, uh, the price of crude would move sharply lower should there be some type of either deal reached, or, the conflict. It becomes clear that the conflict is winding down, maybe because the Iranian side surrenders and capitulates to all of the demands being made by the United States of America. So the 24-hour ultimatum that they're talking about is, tomorrow, Tuesday, 8 p.m. Eastern. And, this is either they reopen the strait, and which means simply stop harassing shipping, or they're going to have all of their power plants and bridges blown up. I don't know if you saw the way that Trump was talking
No,
about that.
I didn't.
Oh, dude, it was great. So he comes out and says, we're going to send you back to the Stone Ages and you'll be living in hell. And then he said at the end of it, praise be to Allah.
Oh,
That's what
damn,
I know, dude. Like cold
man.
blooded, man.
That guy is like the ultimate troll.
He really is, man. He really is. And so this Operation Epic Fury is going to achieve its objectives. There's no doubt about that. I think it already has. And now it's just a matter of let's get that straight back open. And once that straight opens back up again, well, then I think crude oil would dump. I think that it would likely just dump, probably back down to like its 200-day moving average. In fact, if I just zoom out to a daily from the 4 hour, we can actually see where that moving average is. So the 200-day moving average is all the way down here, near $66. By the time we get down there, though, it'll probably be around $70. So crude oil to me looks like an excellent opportunity to get short right now.
That's
Um,
exactly what I was just thinking. Just the way that you were, kind of leading up to that. I'm like, well, and the big white arrow, it was kind of a good indicator that
yeah.
obviously it's something you drew there, and you were that's your thought of where it's going.
Yeah, look, I don't have a crystal ball, of course, but the more I hear people talking about $200 oil, the more I think that maybe we've already seen the top, and we might be about to see, especially if there's a surrender, if the Iranians, whoever is left over there, surrenders, and that's like made public,
Mhm.
then I mean, dude, crude dumps. So
Yeah.
let's say that that happens, right? And crude, there's surrender in Iran, and the strait reopens, and crude starts pushing lower. What does that mean for digital assets? What does that mean for the S&P, for equities, which
Mhm.
have, started to roll over here a little bit and are still, basically trading at their 200-day moving averages respectively. So like, the S&P trading at its 200-day, the Nasdaq is at its 200-day, the Russell actually held its 200-day and looks like it could push a little bit higher. So this means maybe we see a little bit more upside out of Bitcoin. Maybe we see a little bit more upside out of ETH and alts. This is actually starting to shape up out of BTC, where, hey, you know what? If we get a little bit of a push here, well, then that $76,000 level, that could come into focus really quick. So this level right there, that recent high at 76K for BTC, that is an important level to watch, especially if we get some type of positive news out of Iran, out of the Middle East. And this is still a bear flag. However, this pattern, this is still a flag. So my expectation is, given enough time, Bitcoin rolls over. But in the immediate term, maybe the next couple of days, you might see a little bit more bounce out of BTC. So yeah, I remain short because I'm not using any leverage and I can easily manage my positions. So yeah, I think maybe a little bit more bounce, and probably because we get some type of move lower out of crude. So that's my thought there.
All right. All right. Next up, equities pulse. Tech stocks, the NASDAQ 100, are surprisingly up 1% today as traders weigh the odds of a 45-day ceasefire brokered by Pakistan, Egypt, and Turkey. I mean, are you seeing equities, moving in this manner?
Well, I mean, whenever you hear that there's a ceasefire being brokered by Pakistan and
Yeah,
Turkey, like,
that's
really, really,
well. Let me read some details on this. So, signs of a last ditch effort to secure a truce in the war that has rattled global markets spurred a cautious advance in stocks as oil retreated. Equities rose to a fourth straight session with the S&P 500 set for its longest winning streak since January amid hopes for a push toward a ceasefire in the Middle East. Macron Technology Inc. led gains in chip makers. U.S. crude dropped around 111. The dollar fell. Bonds wavered. U.S. allies are reportedly pressing for a deal with Iran as President Donald Trump extended his deadline to Tuesday for Tehran to reopen the Strait of Hormuz. Axios reported that Pakistan, Egypt, and Turkey are pushing for a ceasefire lasting about 45 days. Iran conveyed its response to the U.S. proposal via Pakistan after 2 weeks of comprehensive reviews, according to a local TV report. The nation rejected a ceasefire while demanding a permanent end to the war in line with Tehran. Good Lord, why can I not say Tehran? Considerations. Trump said he plans a news conference at 1 p.m. on Monday, so today. Markets remain vulnerable to the shifting sentiment around the Middle East. Suffice to say, the president's comments will most likely have a clear impact on setting the sentiment in risk assets as Tuesday evening's deadline looms. So yeah, it looks
Yeah.
like
I mean,
I
Mike, when I'm looking at markets here, man, if we just take a look, here's Micron, right? This is the big chip maker, that memory maker that you mentioned a second ago. Um,
yeah.
all of these markets look to me to have put in some type of a top. Um,
Hmm.
so that just tells me, okay, well, it's probably time for a relief rally, and that seems as though that's what we're getting here out of the S&P. This is shaping up to be a nice V-shaped bounce. But does that mean the bottom's in and this is the extent of the correction, and all of a sudden the S&P just rips back to fresh all-time highs? Well, I don't think so. Once this Iran thing is in the rear view and market participants are no longer focused on, whether or not there's going to be crude oil going through the Strait of Hormuz and, all of the different items going on in the Middle East, well, then they're going to start focusing on macro and economic stuff again. And there are real things to be concerned about. So, if all of a sudden this Iranian thing comes to a conclusion, well, then you'll likely see the dollar come under some pressure. The dollar might roll over. Now, why would I say that? Why would I say the dollar would roll over? Well, because today we're seeing equities bounce a little bit as volatility starts to mean revert and actually get down below trend line support here. So if you see this trend line support, volatility is a mean reverting asset class. So that means we should expect that it ends up making a move back down towards its 200-day moving average down here at, let's call it 19 and a half. So as equities are bouncing a little bit today, volatility is breaking down below support, but the dollar, this one's going to be, driven by rates. And so if we see crude oil over here start to pull back and move lower because the war seems to be ending potentially, well, then what does that mean for inflation expectations? If energy prices start to roll over and move sharply lower, Well, then I'm showing here, Mike, I'm showing the yields, 10-year yields. These are 10-year
Yeah.
yield futures. I think that we should expect yields to move lower. So if yields move lower, that would mean bonds and notes are actually bid a little bit. People are buying treasuries again. So
I
if
was I was
people
I was actually reading with everything going on that pretty much all the experts are saying that the chances of any more rate cuts in 2026 are low to non-existent.
well, right now, yeah.
Yeah.
In fact, some people are even talking about rate hikes. So if I share this tab over here, this is the Fed Watch tool, and this tool is going to give us a pretty good idea of what market participants think the Fed funds rate should be, or the probability of what it could be at different Federal Reserve FOMC meetings over the next 2 years. So the next meeting is this month in 23 days at the end of this month. And the expectation is that there's no change. So the current Fed funds rate is 350 to 375 basis points. And the expectation is that there is no change at this next meeting. In fact, this is so interesting. Just like last FOMC meeting, this
Mhm.
next meeting this month, there's actually it's a non-zero probability of a rate hike. So, remember just a couple of months ago at the end of the year last year, we were talking about, oh, well, we're going to get 3 rate cuts in 2026, don't you know? And
Yeah.
turns out that if inflation pushes a little bit higher, well, then no rate cuts. But
Mhm.
that inflationary genie, um, you know, I really, really hope that we don't see another bout of inflation like what we saw in the 70s and 80s. And I think that the reason, Mike, why that is extremely unlikely is in the 70s and 80s, the United States was not energy independent like it is now. So we were dependent on oil from, you know, uh, the people in the Middle East.
Mhm.
And now we're not. And so the moment there's some type of resolution to this conflict, I think oil dumps below $100. And, we're seeing rents really sharply move lower around the country.
Mhm.
So I think that maybe all of those, hand wringing politicians who have been talking about, inflation exploding higher, and all of the FOMC members who've been saying the same thing. Um, I think that they could all be wrong. And
Mhm.
maybe we don't see a double dip inflation event. And, that would be really, really positive for anyone who, receives a paycheck. Like if you go to a job and you work and you get a paycheck, you can't afford inflation. It's a pernicious tax. It's a hidden tax. And so if we have less, if the rate of inflation is lower, that's a net positive for everyone. And I think that that's what we're going to end up seeing when or if crude oil makes a sharp move lower here. So, yeah, but if crude moves lower, then likely yields move a little bit lower. This is just the yield on the 10-year. This would likely move a little bit lower, which means that you would see a bid in bonds and notes once again. And, during the course of this, what has been a very short Iranian war, a lot of foreign central banks dumped US treasuries and gold in order to raise cash. And so I think we'll start to see that reverse. We might start to see those flows reverse where people start to buy treasuries again. And that would push rates lower. That would likely mean that we see the dollar move a little bit lower here. And that would probably be positive for digital assets like Bitcoin and Ethereum, and maybe a handful of others. So we might see a little bit more upside out of Bitcoin here too. So I'm actually quite optimistic. I think that this conflict could come to a resolution soon.
All right. All right. Well, let's move into DeFi and tokenization because I mean this is something that obviously we're passionate about here, and I've been screaming from the rooftops for over a year now. but the convergence of traditional capital and on-chain protocols is reaching new milestones. So, institutional tokenization. The IMF published a note calling tokenization a fundamental reconfiguration of financial architecture. Distributed asset value for real-world assets hit 27.65 billion this month. So, actually, well, you give your thoughts on that. I'm going to bring up RWA.xyz just so we can share this graphic.
Sure. So, International Monetary Fund, whenever they have something to say, you can be guaranteed that it's going to be good. Like these guys, like these guys are dirtbags, man. Like
well,
read their
well,
history.
you can be
You know,
guaranteed that it's going to be that they're going to do. Hold on, I got to sneeze.
bless you. Yeah, no, I mean, whenever I hear something about like, World Economic Forum or the International Monetary Fund or the WHO, like all of these big international globalist
Mm,
institutions, these guys, I've only read little bits and pieces of the history of these organizations, but they're all like horrible. It's like horrible
oh no,
history, you
absolutely.
know?
But you can be guaranteed that they're going to be doing whatever it is that they need to do to stay in power, to stay on top, to make money, and and keep that position that they've built for themselves. And part of that is love it, hate it, whatever, is the tokenization of real world assets is happening because they see the value in it. They see how they can profit from it, and they understand that if they don't control the narrative, if they don't control the technology, then potentially they can be replaced. Because DeFi, if everybody on the planet was knowledgeable about DeFi, and we all just decided we're not using traditional finance anymore, we're gonna all debank, we're all just gonna do peer to peer. We don't need banks, we don't need institutions. I mean, it's potentially highly possible that we could remove the whole corrupt system, and they understand that because they at first they were laughing at crypto, and I was one of them. When crypto first came out, I called it the Pokemon cards, digital Pokemon cards when people were telling me about Bitcoin back in 2011,
Look
2012.
at what Sack Nasty and Ellie are saying in the chat. They're talking about fucking Jews.
Um,
I know, bro.
so
It's making me
so
laugh. Yeah.
So basically, I mean, that they're going to be doing whatever it is that they need to do to stay on top. And you can see by the chart that this is just up and to the right. I mean, it's, for the most part, everything is being tokenized. You got, the treasury debt, commodities, credit, all the different types of credit. You got real estate, stocks, just all of it. And all of it is being tokenized. And the reason is that it makes illiquid assets liquid. You can take out loans against them. You can, which is in the U.S. at least, you can avoid a lot of the taxable events if you aren't liquidating an asset, if you aren't selling an asset. If you take out a loan against it, it's actually a tax write-off. So I'm sure they love that aspect of it. A way to access that liquidity without incurring a taxable event. And then, of course, there's the fact that they can 24/7, 365. They can buy, sell, trade, all of those things, and it removes a lot of the friction and a lot of the fees. So it's it is happening. And if you're watching the data and not the price, you can see, I mean, they are just beating everybody out of these markets when it comes to retail. They are just beating down these markets. And if you watch the whole time, all they're doing is building. All they're doing is buying. They're buying these assets. They're building on these chains, and they are building the new the new rails, the new financial system rails. And I mean, and that's
Yeah.
the long and the short of it.
So, Mike, I'm reading about this IMF April 2026 note on tokenized finance. And so there are a couple of interesting takeaways here from the note. So the IMF identifies atomic settlement and efficiency, that this transfer of asset ownership and payments, that since it occurs in the same ledger 24/7, that this is, a great way to really open up and become much, much more efficient. So duh, of course
Yeah,
it is.
yeah,
Like, in all of the educational content that I've created, over the last couple of months here, the DeFi high school stuff, the DeFi university stuff, it's pretty clear that the way the traditional banking system works, all of that friction is there intentionally so that these institutions can essentially steal from their customers in the form of fees. Like, that's their entire business models are theft and friction, and let's
yeah.
charge fees for everything. And
Well,
so the I
created friction, like purposeful friction. It's
right.
not just it's not a result of the system. It's actually constructed because they can charge fees. Whenever there's friction, they can charge fees.
Yeah, yeah, and it's so Bitcoin, crypto, Ethereum fixes that. It solves for that. If you have atomic settlement and you don't have a middleman, well, then you no longer need a bank. It's in fact, if you continue to use traditional banks, it just slows you down and it just costs fees, and it's just a huge headache. I don't use traditional banks if I can avoid it. And
Yeah.
then here's another point. It says the loss of temporal buffers. So buffers in time. So it says the IMF warns, uh-oh, this must be good for us. If they're warning about it, it's got to
Oh
be a good
yeah.
thing for us. So the IMF warns that while tokenization removes costs and delays, that those frictions historically acted as shock absorbers. Oh, really? Did they? I thought that that was the way that the banks made money off of us, was through these frictions. It
Mm.
says removing them eliminates the buffers that allow banks to mobilize liquidity or authorities to intervene during market panics. That's bullshit. That's just not true.
Yeah.
Okay, so it says here's the next takeaway: need for a public anchor. Oh, here we go. Whenever you see something about ensuring safety, okay,
Oh
coming from
yeah.
one of these institutions, you
Mm.
know that you're about to be given a bunch of crap. So here it says the need for a public anchor. To ensure safety, the IMF advocates for the use of wholesale central bank digital currencies. Oh, of course they do. They're
Anytime the governments and large organizations like this talk about safety, that there's going to be a bunch of rules and fees, and basically it's bad for us. Anytime
right.
that they're looking out for our best interests, it's all about safety. It's always a negative thing for us.
Always. And these institutions do not have our best interests in mind. These
No.
institutions operate in order for them to keep power and control. That's it. If we die as a result, so be it. I think that that's what it comes down to. So they're talking about they're warning about the loss of friction. They're saying that in order to ensure safety, we need to use central bank digital currencies. And now they're saying that there's a risk of code is law. Of course, they would say something like this. This is
Right.
just perfect coming from the IMF. This is great. So it says the risks of code is law. It says the note highlights the danger of automated systems. Oh, they're dangerous now. For the children, Mike. We got to save the children.
for, for the
That's
children.
that's what they're going to say next. I guarantee you, man, there's going to be some note that's going to come out and say, if you want to protect the children, you need to the central bank digital currencies. Like, and so it says,
Oh,
yeah, if a smart contract contains bugs or triggers a flash crash, there's no human pause button to halt the chain reaction. Okay, I mean, yeah, that's doesn't even make sense to me. And then there are two final points here. The second to last point is about liquidity pressures, where they're saying that near instant settlement requires institutions to maintain constant high levels of liquidity. which could strain the financial system during periods of high volatility. Wait, what?
That tokenization solves that issue.
I know, and they're saying that the instant settlement means that institutions have to maintain constant liquidity. Well, isn't that the whole point?
Yeah.
Like, you know? Here's the
Well,
final point. Yeah.
oh,
So
go ahead.
the final point, it says the market's growing. So as of April this month, 2026, the total value of RWAs, excluding stablecoins, is estimated to be approximately $27.5 billion. Private credit and U.S. Treasuries leading the way.
Yeah,
So yeah,
27.65 billion.
yeah, man. So that's a little bit from the IMF. So yeah.
All right. Well, next up, we got DeFi Technologies. DEFT is the ticker. The company reported record 2025 revenue of 99.1 million and saw a 97% spike in call option volume today, signaling high institutional bullishness. So that's the article I have pulled up here. Get rid of that.
DEFT, you said, yeah?
Yeah. It says investors bought an unusually high number of call options, 3,419 calls, about a 97% increase versus the average, signaling elevated bullish activity in DEF options. Institutional investors have been increasing exposure. Invesco up 141%, Millennium up 104%, and daily trading spiked to 15.7 million shares versus an average 5.5 million. Analysts show a consensus moderate buy with an average price target of $4.50, while the firm reported solid quarterly results. EPS 8 cents, revenue 19.08 million, net margin 23.89, ROE 105.69. So what are you seeing as far as DEFT?
I'm just thinking to myself, who owns this? Who owns this company? Who are the major institutional shareholders here? And what I'm seeing is Invesco, um, Susquehanna, Galaxy, Millennium, Charles Schwab, and then Weiss Asset Management. So yeah, other notable owners include the Bank of Montreal, Jane Street Group, Citadel Advisors. Okay. And I'm just taking a look here. I want to see, what is it that these guys do? What do they
So
actually do?
DeFi Technologies Inc. is a Vancouver based company focused on decentralized finance and digital asset investments. Through strategic equity stakes and token allocations, the company aims to provide investors with exposure to leading DeFi protocols, applications, and infrastructure projects.
Hmm.
So it sounds almost like maybe a fund of what they consider high quality DeFi plays. And so its core activities include sourcing, evaluating, and acquiring positions in blockchain based platforms that facilitate decentralized lending, trading, yield farming, and liquidity provision. In addition to its investment portfolio, DeFi Technologies works to develop and distribute tokenized products that bridge traditional capital markets with emerging DeFi ecosystems.
I see now. Okay. So it looks like they do a couple of things. So what you just said about like wrapping tokens into products that institutions and individuals can buy, they call them ETPs.
Mhm.
We're familiar with like ETFs and all of these different notes, but collectively they're called exchange traded products. So it looks like they do that. Okay, great. They've listed over 100 different ETPs so far, as of early 2026. So, okay, got it. That's how they make some money. It says infrastructure and liquidity also. So, Stillman Digital acts as their prime broker. And, they basically give them the liquidity to be able to buy, tens of millions of dollars of, token A or token B without crashing the price or pushing the price up against themselves. Um, so that's, they buy significant digital assets that way. Looks like they've also got a proprietary trading arm. And apparently, this is the company's internal profit engine. They run an arbitrage desk. So that's kind of interesting. It looks like it's generated almost $100 million in profit since 2024 alone. And then they've got a research arm. Um, so it says it's led by well known figures in the crypto space like Anthony Pompliano and Will Clement. Um, yeah, so I mean, those are definitely big crypto influencers for sure. I think that they do also, create their own research. So kind of interesting that they've got a little bit of everything here. They create and launch exchange traded products. They trade and they produce research. So and they're owned by really really big Wall Street firms. So I think that this is probably a net positive for the space, wouldn't you say, Mike? To have a company like this, and a company that's listed on the Nasdaq, seemingly actually starting to make some money and maybe bouncing a little bit. I mean, the stock has been beaten down. Just taking a look at the stock, it has really been beaten down. So, um,
I would
maybe
be interested to see what they are investing in. Like what protocols are they actually investing in?
good question. What do they actually hold or invest in DeFi token wise? I'm just kind of curious. I wonder if they actually hold, because it would show up on their 13F filings.
Well,
So,
exactly, and I know that there's a lot of institutions. Not I don't want to say a lot. There's institutions that have been investing in Aerodrome, and locking, or staking.
yeah, uh, not me.
It's, but there's a lot of institutions that are, and and I would guess that Uniswap, Aave, possibly Morpho, are some big ones that I would suspect that they either have some interest or investment in.
So what I see here for DEFT is that they hold a bunch of Bitcoin, several hundred Bitcoin. They hold some Solana. Apparently, they've got a Solana first treasury strategy. Sure, that's working out just great for them. And then they hold AVAX. Apparently, they hold a significant amount of locked AVAX tokens from investment rounds and partnerships. And I mean, if we just take a look real quick, so this is, if they engaged in a Solana first, treasury strategy, well, if this is a Bitcoin bear, like other Bitcoin bear markets, and even if we get a big bounce here, if this bear flag pattern confirms and completes and sends Bitcoin down to below 50K, well then Solana is going to get routed, down here to like $30 or lower. So if we take a look at AVAX too, AVAX is an interesting one because this one has already broken down to fresh lows,
Mhm.
below its lows from last bear. So AVAX really really underperforming. Um, Solana's not much better, and Bitcoin remains the king here, but it's a Bitcoin bear. So if I'm just thinking to myself, okay, well, in their treasury, they hold, it looks like, 2.2 million Sol, a bunch of locked AVAX, and then 204 Bitcoin. So, okay, that's the treasury for DEFT. And then
Really?
yeah, so what exactly do they do to generate real yield? And what about
Yeah.
infrastructure tokens?
They How did they make 99.1 million in
Yeah,
2025?
it looks like since 2024, that's how much their trading arm has made in profit. They're running some type of an arbitrage desk,
Okay,
but
okay,
yeah, it looks like the top five holdings so they use a subsidiary called Valor to launch these ETP products. And their top five holdings in those ETP products are Solana, that's their largest ETP by volume. And then Ethereum, they've got a staked Ethereum ETP, it looks like. And then Hedera, HBAR for some reason. And then ICP, wow, that's still around? Okay. And
right?
then China, I know. And then Chainlink. So,
It's
okay.
good.
Yeah, I mean, look, Chainlink is very useful as a protocol. You need those
Yeah,
oracles, but
I'm still up in the air about if I should hold the token or not, though.
the Link token, yeah, I'm not sold on it either. I'm not quite
Well,
sold on it either.
well, and just so people understand what we're talking about, I mean, this is something that we talk about quite a bit. But if you're new to the channel, very, very bullish on Link. I mean, the protocol itself, or the chain itself, massive partnerships. Everyone's building on it. Everyone's using it for interoperability. CCIP, all that. However, something that we've really started to push here is as we move from a speculative market to a utility market, you have to understand the relationship between the token and the actual business. And if the business, one, if it's making money, if it's making, revenue, fees, whatever, but two, if it is there anything in the tokenomics or the mechanics of it all where that revenue or those profits are somehow shared with token holders? Because if there isn't, you're wearing a football jersey of your favorite team, or you're holding a meme coin basically, because it's pure speculation. People are only buying buying that token um, out of pure speculation that the price is going to go up. And if there's nothing behind it, if there's no value behind it, because it's not directly attached to the success of the business, like a stock would be or something like that, then there's if people all woke up one day and realized that and all sold at the same time, the token could dump. That doesn't mean that the company or the project is going to die. If they're generating revenue, because people are using it, like good projects like Tron and Canton Network and uh, and Link and these different different projects, they'll keep trucking along. They don't, if the price of the token, if it's not somebody like a lot of crypto projects, but the one that always stands out to me is XRP and Ripple. Is the only reason that Ripple really cares about the price of XRP is because of the escrow. They sell XRP each month to fund their operations. That's the only reason they care about the price of XRP. You know, Really the only thing the XRP is a very low, a price, a gas token for a network that charges very, very small gas fees. That's really all XRP is. It has no direct, relationship to the success of the company. Otherwise, when you saw all this bullish news come out about Ripple, you would see the price pump, and you don't. So,
Yeah, I think XRP is just used by Ripple Labs to fund their operations, whatever those are. They don't launch any products, they don't ship anything cool. So, yeah, man, I would stay far, far away from XRP and all of those other ISO tokens. Um, and, one of the things that I think is important to be careful of is like that call to authority. Yeah, exactly what Jay's saying there. So for Arrow, if we talk about Arrow, for example, um, it's okay to have a bullish thesis for the Arrow token, but I would just be very, very cautious when you talk about like, well, because they're partnered with this company or that company, um, that means number go up. I would
well,
just be
they,
cautious.
well, yeah, absolutely. But the caveat to that is that they are buying the Arrow token and they are staking it, and it's locked for 4 years. So if they are investing their money in that way, then potentially, not guaranteed, but potentially, they see a very bright future. That's an indication or a data point that you can use to formulate a bigger picture of if they're willing to dump that liquidity and lock up that liquidity, then they see a future for this product, this product or this this protocol, this platform. So that's the takeaway that I get when I see these big names that are not just buying the token but are max locking it for 4 years. So it's a little bit different than somebody buying the token and trading it, just because they can be in and out of it very quickly. But when it's locked for 4 years, their only option to get out of it would be to sell the NFT, the NFT representation of that lock at a loss. And usually it's around like a 15% loss is what it's been kind of averaging. If you just had an emergency, if you had an arrow lock, you needed to get out of it for a car repair, a medical bill, whatever. You're going to take about a 15% loss if you're like, I need out of it right now. I can't wait for it to unlock.
Yeah, I view things a little bit differently. And if I'm taking a look over here, something that came to mind as you were speaking there, Mike, was there are certain cognitive biases that we all fall for, even if we're aware of them. And so I think that hopping on over here to the node.pro and jumping into the courses. Um, Jumping into the courses section. And then if you scroll down a little ways and you take a look here, I can just, go back to all courses here. So this is the node.pro. This is courses. If you just scroll down here a little ways and then get to the investor mindset course, 12 lessons, takes about 6 hours to go through. I would recommend that, maybe we take a look here at lesson 5, all about cognitive biases in DeFi. Because our brains are really not wired up well to be investors. These different types of biases, even when you're aware of them, can really hurt you. And for me, when I think about an institution taking a position or news of an institution taking a position, I filter that information out because that is not, at least in my opinion, that's not a signal for me. That's not
Well,
something that.
any chart you look at is that exact same thing, though. If you're looking at a chart and price is going up, that is more people buying than selling. And large moves is large institutions buying that asset. So it's the exact same thing. It's an indication or a representation of the bullishness or bearishness of each of these assets. It's 100% the same thing. If there's institutions that are buying large amounts of Arrow and max locking it for 4 years, I would say that's more bullish than a 1 day candle or a 1 week candle or a 1 month candle because, again, they are max locking liquidity that they could be using in other investments. So, I mean, that's my take on it. Could I be wrong? Absolutely. But I just, and I'm always very critical of my investments. That's why I always seek out, opposing views, on a lot of my investments is because of what you're talking about. That mindset that we get into where we seek out things that make us right. We seek out
Right.
information that says you're making a good investment, as opposed to where I'm always seeking out, personally, just it's a habit I've gotten into. I always try to seek out the things that tell me I'm not making a good investment. And that's how I got out of XRP at $2. Is I started seeking out information instead of just listening to all the channels telling me XRP to 589 and all that stuff. I
I
started,
thought it was going to $10,000. Ten
dude.
thousand
I've heard
anytime
so many
soon.
things, but that's again, that's how I got out of XRP at $2 was when the lawsuit, settled and the XRP price didn't pump like we were told it was going to. I started digging deeper, and the more I dug, the less I liked, and I got out of it. But anyway, let's
Yeah,
see.
yeah. I mean, for me, I I just I don't like the call to authority part of,
Oh,
saying,
absolutely,
yeah, that
absolutely.
that for me is not something that I use. So
Well, the call to authority I don't like when they're like, when people post and they say, there's a rumor of, or if, or could, this project go to this, price point. There's rumors that they're talking with Mastercard, or Mastercard mentioned them in an article or in an interview. There's nothing, it's, to me, that's smoke and mirrors. They're not putting their money where their mouth is. There's no meat to it. But when these institutions start actually putting money, then that's when I take a little more notice. I put a little more weight into it. Is my point.
I would just be really, really careful. And I would just, you got to verify, right? So if it's true that some of these institutions have taken positions, I would want to know the exact dollar values. I would want to know, are these hedges? Are they hedging it some way so that they're actually delta neutral because they don't want the directional exposure? Have they sold it? Who knows? Because whenever I hear something like, because institution XYZ took a position in this asset, therefore, they must know something. And that must mean that they think they're going to make some money. So I should hop on the bandwagon and do it too. For me, um, I would really, really want to dig in and get the details of that investment. Like, because the way that
Well,
institutions
I would
think
go
is
further.
different.
Well, I would go further than that. Just, I mean, all it is a data point, or not a data point, but one piece of the puzzle. Yeah. I mean, should you go out and buy a bunch of locks just based off that one thing? Absolutely not. You need to look at the whole picture. But that's just one of the many things of the total picture that you put in the puzzle. And once you go and get all the positive and negative pieces of the entire picture, that's when you look at the whole thing and you decide, is this a good investment or is this a bad investment? That's part of the do your own research. You have to look at all of it and paint the entire picture. But you, like David's talking about, you need to make sure that you're not just seeking out the information that supports what you want it to be. You need to seek out the information that represents what it actually is in reality, good and bad.
100%. And so, for me anyway, if I see information that an institution is doing, A, or an institution is doing B, and number one, I think that most information that we're given is mostly bullshit.
Oh,
And then number
absolutely.
two, I would probably want to do the opposite. Um, so yeah, I would not be a part of the herd. I would be the contrarian. So that's just the way that I kind of think about this stuff.
Let's see.
What else is going on today, Mike?
I'm digging through some stuff here. Let's see. So it looks like a Solana infrastructure. New protocols like Encrypt and ICA are launching on Solana to power bridgeless and encrypted capital markets, aiming to attract institutional liquidity. This is the first I've heard about this. What are you seeing about this?
Tell me about that again. Well, what was it called again?
Let me pull up the actual article. So let me bring that down, bring that up. All right, let's see. Here we go. ICA is coming to Solana to power bridgeless capital markets. So it says Grand Cayman Islands. Hold on. What do we got? There we go. D wallets make it possible to bring assets from every network to Solana to hold, trade, and use financially without bridges. ICA is coming to Solana with a clear vision, bridgeless capital markets. Solana is the number one ecosystem for blockchain developers and the most used blockchain in the world. It is where the fastest teams ship, where, whatever. ICA is bringing,
You know what I
they're
mean? Yeah.
just like hyping the
Yeah.
projects. ICA is bringing to Solana a new primitive, D wallets, decentralized, programmable, multi chain wallet accounts that let Solana users control assets on any blockchain without trusted intermediaries. With ICA, Solana is not just the best place to issue new assets or trade Solana native assets, it becomes the place where assets from every network can be held, traded, and utilized financially on Solana without bridges. Um, all right, so Solana is supposedly emerging as the home of internet capital markets, but today non-native assets typically reach Solana through bridges, introducing fragmentation, synthetic wrappers, and trusted intermediaries. ICA replaces that model with D wallets, enabling Solana applications to control assets across networks directly with zero trust cryptography. This makes Solana the chain where all digital assets live on natively. Bitcoin, RWAs, stablecoins, and other assets issued elsewhere can be held by Solana users and brought into Solana trading venues, lending markets, treasury systems, and consumer products without fragmenting liquidity across wrappers and synthetic versions. Capital from every ecosystem can flow into one execution environment, Solana. So what are you seeing? What are you finding on this, David?
Uh Man, I could talk some shit on Solana right now, but I don't want to.
Dude, I mean, we're here to expose the good and the bad about everything. So if you're finding something and it's factual, let her rip.
I mean, okay. So, number one, when I think about an execution layer for global finance, usually I don't think of Solana, but I think also it's very early. Like, whenever people say things are early, hey, they still are. Like, when was Bitcoin created? And like the white paper dropped, I think on Halloween 2008, right? Was it Halloween 2008 that the white
I
paper
think
dropped?
so. I think so.
Yeah, so 2008, and it's April 2026. So, we're not talking about like, decades and decades here. We're talking about like, maybe 16 years, right? Or how many years is that? 18 years? However many. I can't do math in my head right now. But regardless, like that was Bitcoin. You didn't really have, there was no Ethereum until 2016,
Yeah,
or 2015. Solana was what, like 20, when did Solana launch? As a protocol.
yeah. Let me look it up.
I don't quite remember here. The only point that I'm trying to make here, Mike, is that this entire space is being built as we speak. And so for someone to come out and prognosticate and to say that
2017,
2017, got it. Okay.
and then
So
and then it officially went live March 16th, 2020.
yeah, I mean, look, like, it's new. It's really new. And to come out and say that Solana, or any chain for that matter, is going to be the execution layer for global finance, it's probably premature to be able to say that. And, I just think back to the browser wars and the operating system wars, because I think that that's probably closest to what we're going through now, with all of these different chains and all of these different institutions taking positions in these chains, and building different dApps and products that either other institutions can use or retail can use. I think that this entire space is nascent, and that's what makes it so exciting. But all the buzzwords, though, Mike, from that last article about ICA, whenever I
Yeah,
see buzzwords like that, especially when it has to do with Solana, I always take a step back, because, number one, those buzzwords usually aren't, like, it's usually not a good thing when you see so many of those buzzwords like grouped together. So that's number
I just
one.
I don't like it when any words, like emotionally charged words, are
Right,
used. I
right.
mean, because to me that screams manipulation. It's they're trying to invoke an emotion in you, because anytime an emotion can be invoked, you're more easily manipulated, and that causes that excitement, that FOMO. If they're using all those buzzwords. So anyway, yeah, anytime I that's why I usually skip over when I'm reading these articles and I see that it's just a paragraph of them using a bunch of those emotionally charged buzzwords. I am like, okay, let's skip past that. Let's get to the meat and potatoes here.
Yeah, and the meat and potatoes of what it looks like they're actually building is, it's great. It's great to see this type of stuff getting built. They're talking about, the ability for Solana to become, they call it the control center. Okay. But again, that's not exactly a buzzword. It's just something that makes me go, okay, um, do I trust this? Like, I really, whenever I see a ton of buzzwords like that, I really need to go into verify, don't trust mode. And whenever it comes to crypto and DeFi protocols, it is verify, don't trust. That's what it is. So,
And that's how I feel like whenever I hear anybody giving price predictions, and why I'm so staunchly against trying to give price predictions, especially since I have no fucking clue what I'm talking about when it comes to like reading charts and stuff like that. But anytime anybody starts talking about price predictions, and especially if they're just obviously ridiculous, I equate that to exactly what you're talking about, using those buzzwords.
yeah, so the timeline for what they're actually building out there over at ICA, it
Mhm.
looks like they're currently live on the DevNet, the Solana DevNet. um, and they're allowing developers to start building bridgeless applications. Okay, so this is definitely interesting. No doubt about it. I would like to see more and more, teams of developers ship interesting products like this one, and for there to be adoption of it. If it's a quality product that meets some need in the marketplace, I'm all for it. Um, I just do I want to be living on Solana for my life, for my financial life? As of right now, probably not. Probably not. So, I hope that whatever their product is, that they're able to bring more utility to Solana. That would be great. Um, but it needs to be proven out first. It really
Oh,
does.
well, and that's a big part of what's going on right now is, and again, this is something that we've been saying on this channel for over a year now, is we are moving from a speculative market to a utility market. The days of a project saying that this is what we hope to build or what we're trying to build, or is over. These institutions that are investing real money, they want proof of concept. They want you to show your work. Show us that your project works. Show us it's secure. Show us it's the fastest. Whatever it is that they're looking for. They want a turnkey product. They or close to it before they're going to invest. And depending on the type of investor they are, if it's an angel investor or a VC, they're going to be a little more flexible. They're going to be like, okay, we see the potential here. Whereas if it's an institution like an established bank like J.P. Morgan Chase or Wells Fargo or or the New York Stock Exchange or something like that, they want something that's turnkey. They don't want something that still needs work. They might invest a little bit, but they're not going to start building at scale on a unproven product. It's just they're not going to invest that money. So that's where I see that we're at right now. Is we're in that transition period. How long that's going to take, I don't know. I'm not going to pretend to know, but I do know that as we make that transition, the out of the what freaking 25 million different cryptos that are out there, 48 million cryptos that are out there, probably about 98, 99% of them won't exist, in the near to, to distant future. They're just going to go away. And there's going to be the ones that are building out the future financial system. And do I see Solana potentially being one of those? Absolutely.
Sure, why
You know,
not? Why not?
yeah.
Yeah.
I mean, is it going to be the one? I don't think so. But is it going to be part of it? Because if you look and you see, Base is a strong contender. Solana is a strong contender. I see Tron with its stable coins being a strong contender. Bitcoin, of course, Ethereum, of course. Ethereum is the 800-pound gorilla when it comes to DeFi and smart contracts, things like that. Um, and for the most part, Canton Network is another one that's not just signing huge partners, but a lot of the partners are standing up super validators. They're standing up.
Because they're actually using it. That's the thing. They're actually using it. It's not just like, some random partnership deal where there's a news announcement and then that's it. Like people are
Exactly.
actually using Canton Network as their digital rails to settle value. That's a big
Well,
deal.
to the tune of between $2 and $3 million a day in fees that it's generating. So that's
Yeah, and
profit to the company.
but Mike, that means that like the actual value that's being settled on those rails is probably in the tens of billions of dollars a day, you know?
Oh
So a
yeah, yeah,
lot,
yeah,
a lot, a lot. And
yeah.
so you see, I want to just touch on something that Jay said in the chat real quick,
No, please.
about, gold having been around for more than 6,000 years. And, since Bitcoin's up there, as a 1 point something trillion dollar asset now on the same list with an asset like gold that's been around for 6,000 years, that's really impressive. It absolutely is. I agree with what Jay just said. One thing that I want to just push back on a little bit here is I like to think in terms of longer timescales. And so if Bitcoin hasn't quite been around for even 20 years yet, there's still plenty of opportunity for Bitcoin to fail. Okay. Like I just want to say, like, hey, I love I love me some Bitcoin. Okay. But
And that goes back to what you were talking about earlier. Is not getting into that mindset. Just because you're bullish on something is, I mean, you're one of the biggest Bitcoin bulls that I know. But having that mindset of, hey, yeah, it's performing very well, relative to gold. But at the same time, gold has been around for 6,000 years. You can't find a place on this planet where if you showed somebody gold that they wouldn't take it as payment. But can you say that about Bitcoin? Gold is entrenched, as a form of value. Everyone sees it as value. We haven't gotten there with Bitcoin yet. So, that's kind of what David, I think, is trying to get at, is just, it hasn't matured as a store of value yet. It's getting there.
yeah, exactly. Exactly. And so, I always like to think about what could go wrong. Like, what is the risk before I ever
Mhm.
start thinking about, like, okay, let me count my chickens before they hatch type thing. Um, so, there is massive risk with Bitcoin. There's massive risk with Ethereum, massive risk with Solana. All of these new chains, because they are new. Even, something like Ethereum launched in 2015, 2016-ish, like,
Mhm.
10 years old, just starting to get some real institutional adoption this past cycle. So, that's a big net positive, but hey, you know what? That doesn't mean that we're out of the woods yet. So I always like to think about the risks and like how things could fail. So
Mhm.
yeah, I mean, it's great that these digital assets are being treated as a store of value now. That is phenomenally good. But I don't think that we've gotten through the chain wars. I don't know what do you want to call them? Maybe we could coin a term. I think it kind of is like it's the operating system wars, the browser wars, and now you got the chain wars, right?
I mean, honestly, that's, I mean, probably the best name for it, because that's what you see day in and day out on social media stuff is, basically everybody, hashing out, which chain is better, which one's faster, which one's more secure, which one's getting the best partnerships, which one has longevity, which ones are quantum resistant, which ones are working on becoming quantum resistant. It's a huge dick measuring contest, day in and day out on social media on which project's better.
Yeah, seriously. And then, we got this project Ica coming out with D wallets. It's like, You need some D in your wallet? Got a D
Yeah,
wallet? What the fuck?
I don't want any D. I don't want any
Nope.
D.
So I mean, yeah, no, I mean this stuff is it's nascent, it's being built out as we speak. The chains are battling for liquidity, and it could end up being a situation where, winner take most. So
Well, and I don't think there's going to be one winner. I honestly think that it's going to be a group. It's going to be, because these different projects, they offer different functionality. So I can't, it's very laser focused on that privacy layer for banks and institutions. It's all about moving value. That's kind of where it seems like they're focused. You have projects like Solana and Ethereum. They seem to be more geared towards like DeFi and then you have Chainlink where it's interoperability. You have, and Layer Zero is another one like that, but Chainlink is kind of the big one. But there's all these different projects that are offering these different aspects, and potentially could a project come along that just encompasses all of them? 100%. But that is why you need to keep your finger on the pulse of these markets. That's why you constantly need to be educating yourself, and that's why we're here. Is we want to help you with that. That's why we have DeFi University. That's why David has his coaching. That's why we do this show 2 hours Monday through Friday. So that we can help educate you and kind of weed through the BS. Weed through the chaff to get to the wheat for you, so that you can stay knowledgeable and increase, not guarantee, but increase your chances of success. But ultimately, it's on you. You have to seek out this information, you have to absorb it. And again, don't just take our word for it. You need to go out and you need to, verify, make sure that the information we're giving you is correct, because we're not going to be right all the time. Nobody is. So
yeah,
actually,
verify,
you
verify,
got
don't
about
trust.
You got about 3 to 5 minutes before you got to go for the Mario Nufal show, David. So
Alrighty.
what do you want to wrap up with, and then I'll finish out the last 30 minutes of the show.
I'm just thinking about the comparison between the browser and operating system wars and the blockchain wars that we're experiencing right now. So back in the 80s and 90s, the battle during the operating system wars was for the desktop, and Microsoft won by making Windows the default operating system for hardware manufacturers. So that created this huge network effect where developers wrote software for Windows because that's where all the users were. And then we had the browser wars, which was essentially Netscape versus Internet Explorer. And in the mid 90s, Microsoft realized that the browser could become like a meta operating system. And so they cut off Netflix's air supply by bundling that Internet Explorer for free with
Oh,
Windows.
you mean Netscape?
Yeah, Netscape. Yep. And so now we've got these blockchain wars where Ethereum and Solana are competing to become the operating systems of value. Now, I would say that Bitcoin could compete here too, but you really, really need a large developer community that's willing to build products on top of a Bitcoin layer two, like Lightning, or build a competing layer two. So, in the absence of that, it really is Ethereum and Solana competing against one another to become the operating systems of value. And so, as of right now, I think that Ethereum is probably leading. Well, not probably. I think it is leading because of developer mindshare. So, you know, uh,
Yeah, TVL and developer mindshare, and yeah, no, absolutely, an investment, market cap, all of it.
yeah. So that's just what I'm thinking about. That's what I guess I'll leave as my final thought here is that it's really interesting to see how these different chains are competing against one another to attract liquidity and also to attract developers so that they can get more and more cool stuff built on top of them.
Mhm.
So I think, Mike, all I got to do next is what I just click through that link into Mario's show and then
Yep.
go from there, man.
Awesome. Yeah, no, I'm gonna try to see if I can port everybody over to that here in a few minutes. But if not, David's going to be on the Mario Fall show and represent the node. As I think with the topic, usually I'm on it, but with the topic, I think that he's going to have a lot more, bring a lot more value to the conversation. So I'm kind of excited to see David's premiere on the show.
It's going to be great, man. And what is the topic during the call?
Let me look at that real quick.
And then that starts in just a couple of minutes, right? In 9 minutes, I
That
think.
starts at 9 minutes.
Okay.
All right. So they sent you the invite. So it says it's going to be the future of markets, exchanges, and decentralized hedge funds.
Awesome. That's going to be great, man.
Yeah. No, I think that you're going to be a much more valuable addition to that conversation than I would have been.
Well, I'm going to go ahead and get myself another cup of coffee and hop into that room there, and I guess
Awesome.
I'll see everyone tomorrow.
All right. We'll talk to you soon, man.
Thanks.
Yeah.
Peace.
All right. So let's talk a little bit more about RWAs, because me personally, and this is my personal opinion, grain of salt, but I think that RWAs, at least short term, is going to be the trending narrative, and for good reason. I mean, we've shown you multiple times how, despite the fact that most cryptos, alts, Bitcoin, all of it, is pulling back price wise, all of these institutions, all these banks, all these governments, they're tokenizing everything. All of that TV, all that value, that liquidity is coming on chain. So, despite the fact that the prices of these assets are going down, all of this value is coming on. And at some point, there is going to be a price discovery. And yes, could that mean lower prices? Absolutely. That's going to be for the market to hash out. If some of these assets I think are overpriced, and I think they are going to go lower. Even with the stuff that's being built on them and things like that, because you have to look at the relationship between the token and the actual project, the business. And that's why, again, I always use XRP as it's one of the most well-known, one of the largest market caps, one of the most hyped projects out there. It is because of that very specific reason. There is no direct correlation between the success of Ripple, the company, and the XRP, the token. There just isn't. And one of the other big reasons why I use it is there was a whole court case that went on for years, that Ripple spent hundreds of millions of dollars to fight the SEC. XRP is not a security. And that's the case with a lot of these tokens, and especially a lot of those ISO tokens, because what is it? The SEC just came out recently and had that list of digital assets that they're considering commodities. And I'm wanting to say it was like Algorand and HBAR and XRP and all of the usual suspects. And because it's a commodity, there is no legal obligation by those companies, no matter how successful they are. Let's just say, for example, Ripple becomes the only bank in the entire world, and they move every single cent of liquidity around the globe. There is nothing in the tokenomics or the mechanics of the XRPL or of that token XRP that would necessitate a higher priced XRP. Reason being is the whole thesis behind a high value XRP was pre RLUSD. Stable coins are what is going to move value. It's not going to be a token. They just are not. It doesn't, and not just XRP. I mean, like all tokens, all projects. Um, they are not going to use a volatile asset to move value, because a very small fluctuation, when you're moving millions and billions of dollars, just a 1% change can be massive amounts of losses. And if you're doing that multiple times a day, 24 hours a day, 7 days a week, 365 days a year, those losses are going to rack up. They're not going to do that. Stable coins are going to be the vehicle that moves value. So the key here is to find these projects that there is a connection between the project or the company and the token. And and one of those, like Hyperliquid, is a great example where it actually pays to hold the token. Aerodrome, for me, again, I'm not saying go out and buy it. I know David is staunchly against it, but for me, Aerodrome, 100% of the fees that are generated on the Aerodrome platform go to Aero stakers and people that hold Aero. In those stakes, and those they're called locks now, but they're going to be called stakes. The people that stake Aero. To me, that is a way for the profits of the protocol to make their way back to people that hold those, that stake their Aero. Those are the projects I'm seeking out. I'm seeking out projects that share the profitability of the actual business with the token holders. That's my laser focus. And that's why I hold, a lot of the assets that I hold, is for that reason. And if there isn't something that does that, I'm going to keep saying it. You are holding a meme coin. You are wearing the football jersey of your favorite team, because the only chance that you have of making profit is if there is more people buying that token, through hype, through marketing, whatever. Again, like XRP, massive amount of mind share, massive amounts of people talking about it. That's why you see all the influencers out there. We're not influencers here. We're educators. Influencers are the ones that are out there talking about whatever is going to get them eyeballs and clicks. Whatever is going to get people to, to click on their show, to engage with their posts. They'll talk about whatever just to get the engagement, because that's how they're making money. That's not how we do things here. The way we do things here is we are here to educate. We have products that you can choose to buy if you want to support the channel. Not necessary, not required. Just if you choose. We're going to show up here every day, and we're going to educate you on both the good and the bad of every project. Aero is my largest holding. I'll be the first to admit there's flaws in it. The flywheel that that they're so proud of. David has pointed out multiple times the way that the flywheel benefits us, it can work against us. There's a lot of projects like that. Bitcoin. Am I bullish on Bitcoin? Absolutely. Could it go to zero? Absolutely. If people lost faith in it for whatever reason, if this whole quantum narrative that I think is total BS, not that quantum couldn't be a threat, it's just pretty much everything else digital is threatened by quantum long before Bitcoin. So that's why I call BS on that whole narrative. Again, it's influencers trying to get engagement. They're trying to scare you, get an emotional response out of you to get you to watch their content. Look out for the boogeyman. Look out for quantum. If quantum becomes a reality, the entire banking system, national defense, infrastructure, water systems, electrical systems, anything connected to the internet, anything digital, is potentially at risk. long before crypto. So if quantum is a threat to all of that, the least of my worries is if Bitcoin, is going to be affected. That's my whole take on the whole quantum thing. And you already have a lot of projects out there that are claiming they're quantum resistant now, or they're working towards being quantum resistant. So kind of like the whole Y2K thing. People are going to find solutions. It's just how humans operate. And when you're talking about these, banks and institutions and governments, they, worst case scenario, they're going to pull the plug on everything. If they're that worried about quantum and they don't have safeguards against it, they'll just take everything offline. There'll be siloed systems that, it's going to slow everything down, and it's going to greatly impact the world. But humans adapt. It's what we do. So I'm not that worried about it. But until then, I mean, you got here's some stats. So the owner base for on-chain RWAs has exploded from 100,000 at the start of 2025 to over 600,000 today, driven by the desire to use real assets as DeFi collateral. So that is what I was talking about. With the tokenization of real world assets like real estate, stocks, bonds, commodities, just anything, literally anything tokenized. Before, if you wanted access to that liquidity of that investment, pretty much you had to sell it. You couldn't take out a loan against it. But with tokenized assets in DeFi, with Bitcoin, Ethereum, real estate, bonds, really any digital asset, there's a market currently that you can go and take out a loan and use that liquidity to invest in other things, and rinse and repeat. That is what is driving this tokenization of real world assets. It is improving it's removing the friction that's in the current system and the limitations that are in the current system. So I'm actually going to end it on that. Let me see if I can figure out a way. Let me see if I can find that Mario Nafal show and port everybody over there. Well, they're on X. You know what? I'll do this. At 0x. All right. Well, I'm just going to go ahead and end it there. But if you want to find, David, let's see. There it is. Oh, no, it's not. Here we go. All right. Actually, you know what? Here, let's do this. Let's share my screen.
Some coding to put together my own dashboard for Hyperliquid's API.
We know if
so I've got gold, the S&P, and also oil Brent as well as WTI oil on my screen all day long, and then so at least we can get some idea. I think that these indicators, given the environment we're in today, are things people should be watching. You know, in the old days, you would wake up or Sunday night at 6 p.m. and you go, where the hell is gold, or where the hell is oil, and what's going to mean to my trades? And thank God for Hyperliquid now, you have some idea. I will tell you, over the last 2 weekends, watching the open though, it gaps anyway, right? You think, oh, Hyperliquid crude oil is gonna follow the markets, or you're looking at the ES, right? The ES, the S&P 500, thinking, hey, what's going to happen? What's going to happen with, how's that going to lead into crypto or Bitcoin? And if you take a look at Sunday at 6 p.m. and you compare it to Hyperliquid, you will see a spike. So while we have these DEXs and we're going more on chain and we're getting visibility, the market's still gapping a little bit. But I would tell everybody, keep watching that. And so, you know, my eyes, I now have my own dashboard running, so I don't have to log into Hyperliquid because I'm not allowed to use it in the United States, you know. And so you can go ahead and work around that and just keep the visibility, and we'll see whether we get a taco tomorrow. And if we don't, then I think things are going to look better. If things look like they are winding down or cooling off, Bitcoin is going to rally. Gold will rally. You know, gold is going down in the market that's supposed to be the safe haven. To say things are upside down, I think is a misstatement. It's fascinating. Nothing makes sense anymore. Keep your eyes open, stay nimble, and wait for taco. There's no reason to put a trade on today. That's all I can say.
I can appreciate the granularity that you were getting into with Hyperliquid, and I actually made a note on my paper because I have a subject here that I might come back around to you since you were the first one to drop Hyperliquid, Chris. So hold tight. Sure. Maybe I'll get there. Bull, how are you doing today, man? The market, it seems like they're already calling it a taco. I didn't make any moves myself, but what about you? Are you doing anything today?
No, I wait. I think everybody is waiting to see what happens in this pinnacle moment in the Middle East. So I've got my eyes, you know, waiting to see if actually anything's wicked's going to actually transpire, or there's going to be a finale, or I think we're at this catalyst where the geopolitics is and the oil dollar, the petrodollar, that whole orchestrated terror is going to go one way or another. So I'm chilling. I'm waiting. I'm a long-term holder anyways. My assets they're not in the bind right now. So, but I do believe that what happens next will unlock a catalyst either one way or another. So I'm waiting by, anticipating the all green. And I loved yesterday seeing a couple pumps. You know, Quant, I've been watching for quite a while. It really stood up to the you know, the volatility the last couple weeks. I've been really eyeing the play on Quant's side and the relationships. But for utility coins, everything's still, you know, above board. We got a dip yesterday, but that's very normal with the geopolitical situation that's happened on a worldwide scale. So I'm watching real closely, and I think that's something. At least the good part is something's going to happen one way or another within the next 24 hours. So we'll know one way. It's the idle waiting around, not knowing what's going on, that eats me up. So I'm eating my Easter eggs and watching the popcorn game. So.
I don't consider you to be a reactionary person. Is that fair to say?
No, I'm more of a DCA type of, you know, listen, you've got to just pick projects that are going to end up on the green side. As long as these projects keep moving forward, crypto is going to keep moving forward. Legislation is going to keep moving forward, and the world of a more decentralized, you know, world is going to come. So as long as if you can afford to be patient, and I guess that's the big part right now, is a lot of people are using different types of leverage. I don't. I'm a very, you know, well set up financial, you know, investor. I'm here for the long run. I can take anything, even if we're all sitting here and Kelly can't hear me, and Pulse is you know, hard of hearing, and we're old and we're shouting at each other, I could still wait out the game. I've invested in what I believe in, and I'm here for the long run.
Generational patience, man. I can appreciate that. That's a whole different spaces to get into how you got to that mindset. But let's ask Parv what he thinks about all this, because everybody else seems more level-headed than I expected. Parv, how are you doing today?
I'm also on the sidelines. I'm watching the war like everyone else, but the other thing I am looking out for is the Clarity Act. I think tokens going up or down are dependent on that. Retail everywhere in the world is kind of looking at the war, but institutions in the US, which were all the hype, like everyone was hyping up Wall Street coming on chain now. That has been stalled because the Clarity Act is stalled. Like banks and crypto companies are fighting amongst each other. Crypto companies want to pass on yield to stablecoin holders. Like they want the ability to be able to pass on yield. Banks do not want that because like that messes with their fractional reserve system. So this little conflict, I think, is a big one to watch out for in crypto. But me personally, I'm the founder of Estate Protocol. We tokenize US real estate. That's an asset class which is completely on the sidelines, not affected by any of this. We were, when we started out, tokenizing Dubai real estate, which is very much affected by what's going on in the Middle East now. But when Trump came in, we decided to pivot the geography to the US, and in hindsight, that was a great decision.
Yeah, you couldn't have known then what you knew now. Can I ask real quickly, if you had to say, who are you holding accountable for the delay in the Clarity Act? Do you have any one person or an entity that you think has been the drag on that?
Was that for me?
No, for Parv, or I see Bull waving a hand, but since Parv mentioned it, Parv, is there any one entity that you're really holding to task for why that's not done yet?
For Clarity, I think the big banks, like the last individual account I heard was during Davos, JP Morgan CEO pointed at Brian Armstrong from Coinbase and told him, "You're full of shit." So like the conflict seems to be between the big bank CEOs and then the crypto CEOs. We are more familiar with what the crypto people are thinking because they tweeted out. The bank CEOs, those conversations are more like
Correct.
in private rooms.
Correct.
Bull, go ahead, Bull.
No, I'll just honestly, Parv just said it right now. It's like there's a lot happening on the bank side of things, but a lot is hush hush. A lot is behind it, NDAs. And Brian Armstrong's just flapping his lips all over the world because he's got no stage to run to, right? There is no reason. The money that Coinbase makes is astronomical. The grip that he has on the industry is just, it's not even it's mind-boggling. And the fact that he has been the most vocal, I know personally that he's been interference twice on passing that Clarity Act. He's been the biggest voice that's really battling for that high yield. Now, I do understand the bank's position, but they're not the ones that are putting an end to the Clarity Act. It's more the exchanges, because Brian Armstrong and most of these exchanges, they are the one that are going to be stealing that platform from the banks, right? People aren't going to go to a decentralized platforms to try to get their yields and take their money out of the bank, but they do trust similar type of systems. So they're going to, see the bank, they're going to see their Coinbase account, and they're going to be like, well, I trust them both equally. One's paying me, 4% on stable coins. One's paying me 0.01% on my whole life savings and account. So it's a no-brainer. So I point the finger at Brian Armstrong.
I'm glad you actually did that, because now I got something from both of you. And David, let me ask you, because somebody pointed at the banks and somebody pointed at the exchanges. Everybody's pointing at everybody because nobody knows why Clarity's not getting done. How are you doing today? Yeah, man, totally. It is.
Yeah. Well, what's wild about that too. I think about this, pre 2023, like the life of crypto up until that point, it was just so exciting about this decentralized otherness outside the market, right? Outside the existing status quo. And now everything banks on what Michael Saylor's doing, what Larry Fink's doing, and what Brian Armstrong's doing. Now, Brian Armstrong at least is more of a crypto native, but we've had to kind of coalesce into sort of centralized figures as to where this marketplace is going in terms of legislation and the impact there. On the one hand, it's great because it's giving some sort of voice on in Congress and in different powerhouse global financial circles. On the other hand, are we even the decentralized ecosystem we used to be? I'm curious your thoughts on that, Asun. Is that just a cat that's out of the bag and we just got to kind of dance in both worlds now?
We eventually had to grow. And people's stable coins, I think for a long time when they were using the Bitcoin money narrative, people thought we were just going to exchange coins. The minute we allowed the stable coins to flourish, that's banking. Everybody was going to get interested in the yield. If you start doing RWAs, you need some type of regulatory clarity. I wouldn't want RWAs from anybody if they don't have a military to enforce it. Blockchain is nice, but we need some guns. But I think where we're at, we're just getting in a mature a super LLM at their house unchecked and we don't know what you're typing in. I think, you have to get real about these things in the world that we live in, and you need precautions. You need some form of regulation. You need, low regulation, but not no regulation. These things keep people safe. To be honest, we had the biggest ever liquidation event just from a whole lot of leverage. They did more damage than FTX just from a whole lot of leverage. That lets you know that the regulation, you need some big boy pants, but I'm loving where the space is going. We're getting to where we need to go to a $100 trillion market or a $1 trillion market, the big numbers. I remember when they said they wanted to put the derivatives market on Ethereum, basically. You're going to have some regulation. You have the derivatives market on Ethereum,
Yeah, I mean, it's wild. Even the discourse of what's said on mainstream media, if we don't look at the market price action and you just look at the narrative change of, daily discussions on every financial show, mentioning Bitcoin and Ethereum and what's going on in the crypto ecosystem, legislation, politicians, states with Bitcoin treasuries, what we're doing in the US, what we're doing globally. You're starting to see a lot of change. Even the IMF came out recently. Bogdan, I'd love to get your take on this. The IMF, who was absolutely trying to strong arm El Salvador and Argentina only a couple of years ago, basically holding them hostage for money, but they had to basically step away from crypto. Now they're like, well, actually, guys, tokenization is it's a major impact in the global financial sector now, basically acknowledging that this is something that we need to take a look at. Is this type of narrative shift something that should give people that are super worried right now in the near term? Does this give hints that all the chips are falling into place on the global financial stage for crypto being integrated?
I agree here, and I think even to most of us are decentralization fans. I think what's happening it's for the betterment of the space, because even if you look at it price wise, like before this started to happen, most of the market was controlled price wise by a couple of entities, like 2-3 entities. So the more players, the better it is. Although there are banks or institutions or even states, the more the better in the long run, because actually price wise it's getting more decentralized. There are a lot of issues to fix going forward. Even with the Clarity Act, it's clear like banks don't want obviously to be left without clients. Exchanges, on the other hand, they're almost like banks, so it's easy for them to give higher yield. Coinbase also, they have base where I understand they want to introduce the yield there for stable coins. And the last framework of this Clarity Act, because we're also watching from our point of view, was something like you can give yield as an issuer, but it has to be triggered by an action to be able to give that yield. So, for example, like in our case, it has to be staked or something like that to be able to get yield on stable coins. Which I think is actually quite a decent framework. A lot has to improve going forward, and I think one of the first things should be the people controlling the price and that's probably exchanges. I think we need better regulations.
Well,
there.
I'd love to actually pick your brain about that for a second, Bogdan, because what was it, about a week ago, maybe 2 weeks ago, there was a pretty big enforcement action here in the U.S. where they arrested, I think, 7 people or more.
10.
That was
10.
direct 10. Yeah, 10. It might have been across 7 platforms. I don't know. I know 7 was in there somewhere. But basically about market making, wash trading, propping up, all these things that all of us know have happened for years. And the dark story about this is not something unique to crypto. This has been happening in every tradable market. It's happening in the stock market today. It happens with news shaping of major entities before they go and give directives on price action and play the opposite direction. But where do you think, like, for instance, we have October 10th. I think Chris or X-Finance Bull brought it up. It was you, Asun. The massive liquidations we had on October 10th, which everybody was scratching their heads on because, yeah, there was leverage in the system, but what absolutely tanked the market? And then we look at this enforcement action, and it makes you wonder how much of this is still going on, because you have so many overseas exchanges, but then you've also got a major amount of just kind of the fringes still of wild, wild west, non-super regulated frameworks for what is okay and what's not. Do you think, where do you think we're at with that, Bogdan? Is this still a pervasive issue with a lot of exchanges that people are doing?
I think we're at the same level we were before. I think in this space, nobody learns anything until it hurts. So probably either people have to educate themselves to remove leverage. And here, when I say leverage, is not only perps, because for example, I believe 1010 happened due to loans, not perps. Probably perps had an immediate effect, but I think the lower we went, it was loans being liquidated. And for example, if you go on Aave, obviously on blockchain, everything is transparent. You can see everything. But if you try to see how much Ethereum, for example, is loaned on Binance or USDT, you can't see anything. That's basically the difference from a blockchain to a centralized operation or operator. And basically, most of the exchanges, they have become banks, but they're not regulated as banks, and they are not oversighted as banks.
No. If I could throw in,
Yeah.
I think we're beating around the bush a little bit. It's very simple. These industrial sized players are manipulating the market. They have next to no margins. So whether they're going up and dipping and pumping, they're throwing a full brick of leverage on each direction, and they're controlling the market up, they're controlling the market down. The retail or anybody, we've got margins to respect. We can't play around when we're talking 5-10%, but they can walk away with a 10% margin bet with 7% profit and then flip it around the other way. So that's what is happening, and that's why you can't trade crypto for the last year. Anybody's going to get wrecked unless you're like literally playing jump frog blind through the street and you're running and you're just dodging cars. You can't. There's nobody that I know that's been successful. Everyone's got wrecked. So this has to come to an end. This is exactly what the Clarity Act's attacking, we hope. But is this going to be regulated? Are we going to move towards a decentralized world? Because the banks are not ready to let go. The manipulation is at a level that is profiting. Do they want to stop profiting? Nobody wants to lose their paycheck here. So this is the battle within that we're seeing. Will the middle guy, will we ever earn money from our money? We never have before. They're still fighting against that. So we'll go on praying, hoping, and just moving forward with the aspiration that one day our money will make us money, whether that's in a yield of a stable coin, a digital asset, a tokenized asset. It doesn't matter to us, but legislation and laws have to be taken from control and drop to the middleman. And that's what we're still not seeing, or we haven't seen it successfully happen. And all we're standing here and crossing our fingers. That's the world we live in.
Well, on that note too, I'd love to get Chris, your take on this, and David, if you'll follow up as well, because we're seeing the global marketplace really, I won't say in full, but we're seeing the global financial landscape, major players embracing the ecosystem, Bitcoin, Ethereum, what's going on that. And this is at the same time that we're seeing massive swings in gold and and also silver. And in this case, when we're looking going into fall of last year, not only do we have the October 10th liquidation, but you also had major hedge funds out there that were kind of underwater with a lot of the issues we saw in the silver market, that there's some speculation that also put pressure on other positions that they had in, massive Bitcoin positions that they were trying to hedge. And we're getting this very, just chaos and swings and no real direction on things. Do you think that may be playing to this in addition to just retail going long? Maybe there's some hedge fund shenanigans going on. First time they're playing in, precious metals and Bitcoin and Ethereum.
Kelly, you mentioned everything on the planet other than Jane Street and Luna. How could you forget? Look, I think there's a couple things that we're looking at here. First of all, with regards to the Clarity Act, if you listen to Elizabeth Warren and the banking lobby in the United States, I don't know if any of you have ever gotten a loan from a bank in your human lives, but I never have. And every time I went there, the answer was no. Maybe a credit union, I got a loan once. This idea that they need to protect the banks because of deposits so they could help the small businessman is bullshit. It's 100%. A complete lie. It's a lie. They use it to subsidize. Sure. The American taxpayer subsidizes the banking industry in profits. They play the spread, and you get nothing for your money. It's theft. It's a cartel of theft. I am sorry. It is what it is, right? And that's going to continue. Agree more. If you have a cartel of theft, you're going to continue that, and they're going to fight hard for that. Now, us in the crypto industry and trying to get rewards, and Brian Armstrong and all this other stuff. The reality of life and being as old as I am, what you're going to find out, it's not going to be a black or white answer, right? It's going to be gray in the middle, and it's going to take a long time to get there. Where we're halfway between crypto and halfway between TradFi. But there's no way they're just going to give up all that money. What is it, $50 billion, $80 billion a year in pure profit for doing nothing but holding paper? It's theft, and it's really sad. And that's not going to go, even though Elizabeth Warren is there to protect the American consumer. It's enough to make you want to vomit, right? And so you have that. And then we have all the other shit you talked about in Jane Street and all the other things. And I think that part of the industry is more exciting. This technology is too good. It's too revolutionary. But I like what Bull said, right? It's going to take time. I'm not a big altcoin guy, but I would, if you take the long term, like Bull said, you're going to get wrecked in the markets. I don't really trade so much. I trade a little bit for fun, but the reality is take a look at good projects that are going to do things. Bitcoin's going to be there because it's store of value. Ethereum's going to be around. There's some other layer ones and layer twos that are going to provide the plumbing into the industry. And I think that those are going to be good long-term bets, right? And so this idea, and then we talked about early at the beginning of the show, Kelly or Pulse brought it up, the collapse of DeFi volume, right? And that's because that hot ball of money that they talk about is moved on. My 3 screens that I built over here coming off of Hyper are gold, oil, and the S&P after hours, and that's what I watch. And people realize now that you could trade these other things. They don't give a shit if they're trading a meme coin. They want to trade oil because that's the hot ball of money today. It was gold, 3 or 4 months ago, and now it'll be something else. So what do we have? We got Hyperliquid volume on oil is more than all of the DeFi on Hyperliquid. That's what it is, right? It's hot money. And next, it'll be something else. It'll be SpaceX stock. So our tools that we love, and I love Hyperliquid because at least you get to see 24/7, right? Or Aster, I guess, is out there as well. The point is our tool sets now are going to be used to kind of take us into a new environment. But the hot ball of money is moved, right? And Bitcoin, I think over long term, I pray that it's going to do great. I think it would fundamentally. And so you could take long-term fundamental plays. If you want to do the hot ball of money, it's now going to be executed on our tool set. It's not going to be meme coins, and it's not going to be all the other shit coins. It's just not. And I can't tell you what the next hot ball of money is.
I love that you said that too. And I'd love to get your take on this, David, because I saw, and I did a repost on it on the Discover account, China, which has been so kind of hands-on, hands-off, hands-on, hands-off about crypto over the last 10 years.
Legal, it's not. It's legal.
Well, I saw the article about them basically pushing banks to use blockchain so that they could track better tax reporting and stuff like this. So on the one hand, as crypto natives, we're like, no CBDC, but at the same time, with transparent, blockchains that you can plug into Arkham or something like that. It seems like on our side, we're like, oh, this is a self-sovereignty opportunity, and governments are going, this is our surveillance opportunity. So how do we dissect this or mitigate that, David? I want to get David in on this as well.
Yeah. So Bitcoin fixes this, you guys. And look, in crypto and DeFi, code is law. And so I just want to touch on what you were talking about with the Clarity Act and regulation for a second. So it's completely arbitrary that we are not able to hold stablecoins in our wallets and earn yield natively on those tokens. Circle and Tether are extremely profitable enterprises because they essentially just buy treasuries, earn that yield, mint a token, and then disperse none of that yield to token holders. And that is completely arbitrary. I think the problem is that we don't have representatives in Congress that represent us. They represent banks. And you're never going to be able to earn the yield that we deserve. I mean, look, man, we could have superior financial products that we could hold and custody in our DeFi wallets. We could actually custody these products, but we're not allowed to. And so I think with all of the Genius Act and what's proposed in the Clarity Act, I'm just concerned that it could drive innovators like myself out of the United States. If all of a sudden it becomes pretty clear that you're not going to be able to build superior financial products in the US because it's being regulated away, well, then I'm going to go to South America, or I'm going to go to Southeast Asia, or I'm going to go to some other region where I can build the products that I think are best for individuals, regardless of whatever some arbitrary law says. So code is law in crypto and DeFi. And when it comes to regulation and being able to monitor all of your payments, I would really, really like to see more people build on top of Bitcoin, because what I know building on top of Lightning is that you can make your Lightning payments completely anonymous if you choose to. And that's going to be really difficult to do on public chains like Ethereum or on Solana. We really need privacy layers built onto those chains. Look, all the KYC AML stuff, that is just for theft. They want to tax us. That's the only reason. Whenever I hear, oh, but it's for the children. We got to save the children and, pay your fair share. And you hear Elizabeth Warren, oh my goodness. Did you guys see her on X the other day talking about, if only these billionaires would pay my billionaire tax? You guys, those taxes are coming for all of us. They start by saying, hey, it's just a 5% wealth tax. That's not that big a deal. These guys can afford it. Pretty soon, it's going to be, hey, you know what? We know all of your transactions to everyone anywhere in the world 24/7. We're just going to take it from you.
David, I got to make a comment there. I got to make a comment there, and I apologize to the show and the producers because I'm going to drop an F-bomb right here. You don't need to fucking tax any more money until you figure out how to budget the damn budget and not fail every audit you've ever done at the Pentagon and not have tens of billions into the trillions of dollars of money that is just going. I mean, I guarantee if they got the budget under control, they could probably cut all of our taxes in half, if not nearly eliminate them. That's the ridiculous part about this.
Well, Elon Musk quit. He understood with the Doge, they can't do it. It's too entrenched. The theft and the fraud are too entrenched. It's impossible. The dude tried and he gave up. He realized he can't fix it. And if he can't fix it, nobody can. And it's sad.
And I don't know about you guys, but it's infuriating to me when I see these people from God knows where stealing tens of millions, hundreds of millions, billions of dollars from American taxpayers. And then I'm getting the third degree from the IRS over a $600 payment that I received from eBay. Like, this stuff makes me crazy. And it makes me think, hey, what's the escape valve? How do I get out of this system? The only way is Bitcoin. That's literally the only way that I know. And you know what? We don't need big institutions. Bitcoin's going to be just fine as long as people start building on top of it. But we need an escape valve. And all of this US dollar denominated stuff on Ethereum and Solana, although it's great to see the innovation, that's where it's going to be regulated away first, is those public chains. So I'm bullish, but not until this October. I think we're in a Bitcoin bear. And I think we're going to see like Alt-Mageddon this year at some point. That's the way I'm positioned.
Do you think that any of these exchanges would be interested in hearing your speech about privacy, in the sense that you've already done KYC, but within their own platform, if you could say, hey, obfuscate my transactions, roll them up so nobody can see them, fully homomorphic encryption if you got it. Like, the exchange also wants to see it, right? So you're never going to be able to go to the exchange and get the privacy. Do you think that that's a problem for the users on the exchanges? Because they're not asking for that, David. I don't hear those cries.
Right, because I think that most people who actually use centralized exchanges are not thinking about that. They might be thinking more about convenience than they are about, privacy at the end of the day. For me, I don't use centralized exchanges at all. Like, I avoid using them. I on-ramp and off-ramp in person if possible. And I do my best not to go into fiat.
Me and David are driving 200 miles to an obscure Bitcoin ATM in a mall I've never been to before. When it comes to getting our money out of crypto, I speak the code, David. I understand. But otherwise, we got people that are confidently swiping their crypto.com card for every little transaction. And at some point, you're saying that that's not possible to be confident in, that couldn't at least be audited or maybe even used against you in the future. And I don't think exchange customers generally are worried about that. I know we get on shows like this and when I have these privacy discussions, which I'm fully behind, it is like the beyond the Dunning-Kruger hill where people start to realize that the transparency is also problematic. And now we're having these conversations about privacy, David, but we're so early still. And I hate that phrase because exchanges aren't going to want to hear it. And even the DEXs and things that are integrating it right now just feels so slow. Kelly, I don't know how many times we've had 200 privacy shows, right? And it just doesn't seem like it's actually integrated. And I can even say for myself, I'll dog myself. I haven't jumped up and made significant changes to how I do
the reason
my
why
business.
It's not integrated is because the average person doesn't care yet.
Right. They don't. They just don't. They don't care about their debit cards either. They're barely secure with their debit cards in the same sense. So
I think there's a bit of there's some mud that was poured into the water when you see what's happened over the last 15 years with regulation by enforcement, with what's happened with whether it's Mixers or Tornado Cash or Samurai Wallet, some of these things that have kind of crushed I think there's a fear there for people that are even on the edge of maybe wanting to do, like, I don't know if I'm going to. And then in addition to that, I do think we've had we can't blame the market for this. The crypto is one of the most exciting things that's happened for the broader in human history. And with that, there's been a gold rush towards it, and there's been overwhelming development in terms of whether you could take the token deployers out of it, pump fund and all that, and just look at the number of altcoins that tens of thousands into the 100,000 that were deployed before the token deployers exist. So I think we got Bitcoin, Ethereum, Solana, Chainlink are I feel like the super substantiated ones, BNB as well, of course. But it's like Lightning's got it kind of figured out. Ethereum still needs to figure it out, but I think that there's a regulatory worry of, is this going to bring down bad press or bad regulation or bad? So I feel like that is still being worked through with people. Would you agree with that, David?
I think that Binance is a bad actor in the space. And, I'm just really looking forward to the day when it's not 10 random guys in Singapore that get rolled up by the FBI. And instead, it's people at Binance. I mean, you guys, I put together some research on what happened on October 10th, and I lost 70 grand that day. It was a bad day. I was down a Tesla. And so, but when you take a look at what happened, it was all started based on Binance and their margin system blowing up. And it was a known threat vector that they had even posted about on X. And then what do you know? It ended up getting exploited.
But David, they gave everybody $200 million back, didn't they?
Oh yeah, they sure did.
What was the loss on that day? It was like 4 or 5 billion, some ridiculous number of $1 billion. Yeah.
20.
Yeah, no, it's just a real shame. I mean, these guys just get away with murder. It seems like every quarter there's a couple of different horrible things that happen, and Binance is always at the center of it. And there's never any regulation, there's never any enforcement action against Binance. And in fact, just like 2 weeks after October 10th, CZ got pardoned. Like, that didn't exactly make me feel too good, seeing that. And I'm pro-Trump in just about every way, but I really didn't like seeing that pardon. Yeah, no, regulation for exchanges, if it's going to continue to be the Wild West, then man, you can't even use them. But I would really like to see some real enforcement action take place so that
I'm
people
worried.
know.
David, you said Wild Wild West, and you know what I pictured? I'm worried about some Tombstone shit where you can't even trust the enforcement. That's my problem. Wild Wild West is what it feels like, but you used to live in a world in the Wild Wild West where you had to carry a gun just because you couldn't trust the law more than you could trust the stranger riding up to you, dude. And that's what it feels like. Because you said Binance is kind of a threat actor, and I think right now there's a really problematic level of trust for exchanges just in the industry. That's how I feel about it. And it's weird that it's come this far. And now more than ever, I feel like they've tanked the good sentiment with people like David and Parv and Bull. The people we should be out there trying to convince people like, hey, the best place to start is here. Like back in 21, that's what we were telling people. Sign up. It's easy. Get on an exchange. Start there. I remember doing that with people. And now it's like start on DeFi. Go to that same ATM where David's at when he gets done and sign up, buy your Bitcoin in there. So it's so weird to talk about it, but I'm going to let Bogdan talk about it because Bogdan's got a bone to pick with exchanges just about as much as anyone here. I think we've all probably got a story about getting locked out or something like that, but I'm going to let him get into it. And by doing so, I'm going to also let him talk about ADO protocol as we do that. But Bogdan, there's some people here who've not been to some of the previous shows. They may not know your background or any of your stories. So before you get into any of the specifics, please introduce yourself again and tell us about ADO a little bit while you start.
Sure. Basically, we've started like 4 years ago.
All right. Well, I'm going to end it there because the rest of it, the rest of the show is pretty much just like a paid advertisement. It's it's kind of what pays for their show and stuff like that. So and they've had some really good projects on there, but I'm sure that you guys don't want to just kind of listen to listen to an infomercial pretty much. But I appreciate all of you for watching. I hope that you found some value in this, and hats off to David doing a great job representing the node. But if you would like to, let me do this real quick. Again, if you would like to follow us, pop on over here to at the Node Network, all one word, on YouTube. If you want to follow us on X, it is at the Node Channel, all one word. And if you want to go to our homepage and see all of our different offerings, we have a bunch of content, educational content, informational content here on the website. And it is no charge to you. If you want to check that out, David this week is going to be finalizing a bunch of our paid products. And if you want to kind of take your DeFi education or your crypto investing to the next level, then by all means, you can take part in the coaching, the newsletter. You can support us simply by buying some merch. But that being said, make sure that you check out our other shows. We got tomorrow. We got Crypto and Chill at 5 p.m. Pacific. Blockchain Report. You can check out. Looks like Jeff posted a new episode today for the Blockchain Report. That's just early projects. Got Sovereign Soil on Saturdays, where we talk about emergency prep and homesteading. David will be doing his market wrap up today, and every day, Monday through Friday. And so, of course, we got the DJ Saturday Night Fever Saturday evenings. Got the Red Pill Thursday evenings, and Gaming and Chill on Wednesdays and Sundays. So a little something for everybody. But have a great day. Until next time, Veteran Crypto out.